Gold and silver surges to a 3-month high. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at an article discussing the recent surge of gold and silver to a 3-month high. Is this the reward for all the long-term silver and gold bugs? Are we finally seeing gold and silver kick in to protect from this inflation risk? Let's have a look. But before we go through this article that brought it to my attention, I want to discuss a few things. Let's have a look at the current gold price. We can see here when I took this screenshot, it's at $18.62. $5 to $6 higher now than when I captured this, but you can see it is definitely climbing up to, it hasn't been this for some time. So it's going up, not only gold, silver as well. It's at $27.71. It's also climbing back up. Hasn't reached that, memorable high, but still it's up from where it was some time ago. Remember when it was around 16 bucks, guys? Remember when it plunged back down to 11? So is this, silver? This is the opportunity here. But let's have a look at some search trends. So while we're seeing the price going up, we have to ask, is this a mass movement? Are the public starting to move into precious metals? And I hate to admit it, but one of the best ways to tell if this is happening is looking at search trends. Because, if you do the same, go to Google Trends and look up how to buy Dogecoin, and you can see quite clearly when there's a massive movement into it. So we had earlier, last year we had an increase. This is 12-month time frame on how to buy gold. There was a spike, so it looks like gold is starting to, search trends are climbing up there. More interest, more people are looking at how to buy gold. So the interest has increased over time. There are more searches happening for how to buy gold. Now silver, on the other hand, pretty much nothing. You had a jump earlier on, a huge jump, but now it's just pretty much flat. Search trends have not really differed that much, so we're not seeing it in silver yet. We're seeing it in gold. There is a surge increase. Trends are increasing, but not yet in silver. So what does that tell you? That we're already seeing, a growth. Now, this isn't, one could argue, this isn't mass adoption, guys. This is just the people that, honestly, all of you silver bugs, when's the last time you wrote down how to buy silver into Google? You never would. You don't need to. You know where to go. You know how to buy it. You can buy it online. You can buy it paper. You can go to a bullion dealer. You probably already have a mate on the phone. Or some people are crazy enough to go on Facebook and buy it off strangers and then get them to send stuff to each other. Each to their own. But so this is an indicator of wider adoption. Now, I also wanted to look at just inflation, because traditionally gold, precious metals, silver are considered a hedge against inflation. And we can see, well, interest has definitely shot up recently with inflation, and it's starting to taper off a little bit. Here in Australia, it's even more dramatic. These trends, by the way, are worldwide. They're worldwide. You can focus on a particular region as well. So let's have a look at this. Gold and silver at a 3-month high as inflation fears grow. And we've seen that in the trends. More and more people are worried about inflation. So gold and silver reached the highest prices in more than 3 months, extending a recovery from a slump as growing inflation concerns and assurances on monetary policy pull investors back to the metals. Prices rose as US stocks declined for a second day, with investors weighing the rush to reopen the economy against inflationary pressure from a rise in commodity prices. The precious metals, which are often used as a hedge against rising consumer prices, are also benefiting from a weaker than average dollar and wavering treasury yields. Gold, which was dogged by higher bond rates at the start of the year, has staged a second quarter turnaround. The recovery has been driven by repeated assurances from the Federal Reserve officials that they aren't considering raising rates or scaling back bond buying anytime soon. Holdings in exchange-traded funds backed by bullion rose for a 7th straight session. It seems inflation fears are finally transitioning into higher precious metal prices, said John Feeney, Business Development Manager at Sydney-based bullion dealer Guardian Gold Australia. ETF investors are starting to swing into net buyers again. Spot gold gained 0.1 to 18.69 an ounce on Tuesday after advancing to 18.75, the highest since Jan 29. Silver for immediate delivery rose as much as 2.1% to 28.75 an ounce, the highest since early February, when the metal was trading near an 8-year peak. Palladium rose while platinum slipped. Investors will look to the minutes for the Federal Reserve's April meeting due Wednesday for any signs that policymakers may reduce stimulus earlier than expected. Fed Vice Chair Richard Glaria said Monday the economy had not yet reached the threshold to warrant scaling back massive bond purchases, while Dallas Fed President Robert Kaplan said he expects price pressures to ease in 2022. While Morgan Stanley expects the first warning of bond tapering to come in September, putting pressure back on gold, the bank said bullion has the potential to stay above $1,700 an ounce through the second half of the year. So there you go, everyone. What do you reckon? And what are the solutions and takeaways to this? I mean, are you buying gold or silver? It's really that simple. Have you invested in the precious metals? Is now the time to jump in, or would you wait for a higher price, or for it to dip a bit low? And if we have a look here, you know what? I will bring up the commodity price of gold right now. We can see here, so it's now sitting at 1869, everyone, and I'll just update this. So, yep, gold futures are shooting up. Gold fell back to 1860 region on Wednesday, making a dramatic reversal after testing a key resistance level at 1890 earlier this session amid a stronger dollar and soaring treasury yields. The sharp moves comes after the Fed officials struck a somewhat more hawkish tone in this monetary policy update, pointing to the possibility of starting tapering talks in upcoming meetings if the economy continues to gain strength and inflationary pressure persists, capping further losses with some safe haven bids stemming from rising coronavirus infections in countries from India and Japan. So we'll have to keep an eye on it, guys. Let me know if you're investing in gold or silver, or if you'd suggest it, if you'd do it. I mean, Peter Schiff always recommends having a portion in gold or silver or precious metals. What would be a comfortable percentage? 5%? 1%? Or would you go all in? Let us know. As always, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you in the next episode. Bye for now.